Futures trading involves risk and is not suitable for all investors. Content provided in this segment is meant for educational purposes and is not a solicitation to buy or sell commodities.
Hello and welcome to another edition of the Grain Feed, brought to you by EverAg. This is your weekly news feed for all things grain and all things feed. Each week we bring you updates on the markets with unique perspectives from an amazing team of analysts with the intention of helping dairy and livestock producers manage their risk. I'm your host, Jim Matthews, reporting from Chicago on another beautiful Thursday morning. Easy for me to say. Joining me today, as always, from Kansas, Director of Feed Procurement, Mr. J. Kingsley, and returning to the Grain Feed from Atlanta, Illinois, Director of Buyer Relations, Matthews family celebrity, and fellow good old boy from Illinois, Verl, no doubt, Prather. Team, how are we today?
Doing just fine. A little bit of rain here in central Kansas.
A little bit of rain in central Kansas. How about way down in Atlanta?
It's doing good down here. We've actually got some dry weather for a change. So
I was going to say, that is news for the Midwest. I had to catch myself because I truly had to look out the window for a second. Like, is it beautiful? Is it raining again? That could have been a lie. Okay, so things are drying up down there in Verl. We're going to touch on that with you here in a moment because I think that's continues to be the talk of the town when it comes to the grain markets and the planting or perhaps lack of planting or need to go out and plant again in some spots of the Midwest. Before I turn to markets, Jake, I did get some decent feedback last week on our Boston accents. My mom is from Brooklyn. I was left under the impression that my Boston accent was leaning more towards a New York borough, one of the borough type of accents and not Boston. Did you get similar feedback?
I didn't get any feedback at all. I tend to try to hide from the grain feed once it's been put on the internet.
Once it's been released, you go into a shell and just hope that no one ever sees it. That's great. I was told I needed to rely more on like the like Boston, and then I was saying like Boston. I was kind of going more towards a.
I hear it now.
There's some. Yeah, I wish I was corrected then, but you know what? Hey, we put ourselves out there, Jake. That's what the grain feed's all about. Verl, any shot at a Boston accent?
oh boy. Let's see. Boston.
Okay, I think that's a valiant effort. That's a valiant effort. You know what? I think we could probably just end the show right there and folks would be thrilled with the content we produced so far. But let's just run through the markets, though, before we do. So, Paige, if you would kindly timestamp the broadcast. It is Thursday morning. It's been an interesting week, right? Because Monday markets were closed. We had a 3-day weekend due to Memorial Day weekend. So we are on the third trading session of the week. And all 3 sessions this week, at this point, we have been in the red. So corn coming out of Memorial Day weekend has been down. We are pushing those nearby July futures down right to $4.50 at the moment. So down about a nickel on the day. We've got December corn futures down towards $4.70. We're trading $4.72 at the moment. So a 3-day decline here for the corn market. And perhaps part of the reason, at least, is we're finally seeing some of that pressure in the wheat market. Wheat just on an absolutely torrential run here over the last 4 to 6 weeks, finally under some pressure over the last few days. And we're seeing that nearby July wheat back towards $6.75, and December is now down towards $7.20. So seeing some pressure in wheat, hopefully at least providing a little bit of reason for corn to be dragged back lower a touch for our dairy producers buying that grain. And then soybean meal, stubborn little byproduct. We've got July back down below 370 and December back towards 365. So we're at 364 as we record at the moment. So a lot of red on the screens here as we kick off this shortened week. And I guess we're already in the back half of it now, aren't we? So Verl, let's turn this thing to you then, because I say part of the reason that corn could be under pressure is this relief from its fellow grain, the wheat market. But perhaps part of this also is maybe due to the fact that we have been able to catch up on a decent amount of planting here in the States. And you touched on it here as we started the recording that it's actually not raining in central Illinois, which is indeed an update. So, Verl, what's been happening in the grain markets?
Yeah, well, I mean, as you mentioned, Jim, it's been a very interesting spring to say the least. Grain producers have certainly faced a battle finding the opportunity to just put the corn and soybeans into the ground this year. However, I will say we learned time and time again that you should not bet against the American farmer, right? We learned this week from the USDA that producers were able to get out there and take advantage of 2 to 3 day windows of opportunity spread out across the last 6 weeks, and they caught up to the 5-year average of corn planting and soybean planting. For now, traders are looking at that feed with a bearish lean, right? And that's a lot of probably why we've seen the sell-off both in corn and soybeans this week, as well as, like you said, the corn market has been following the wheat market to a large degree as well. References to the spring of 2019 have floated around, the neighborhood up until the last couple of weeks. However, I think it is important to note that we were much further behind on planting by this time of the year in 2019. And we certainly shouldn't expect nearly as many acres to go into prevent plant as we saw that year, although it is not uncommon to see a few. So if longer term throughout the summer we do find out that some corn was put into prevent plant, it should not be surprising. However, I do believe that pretty soon we're going to see a switch in the conversation to potential for yield, right? And whether or not these delays that we have seen have taken it off the top end of the corn crop, I personally find it pretty difficult to believe that we will reach a national yield of 181 bushels an acre, partially due to the fact that even though we have caught up to the 5-year average pace, this is still the second slowest pace of planting for corn in the last 15 years or better. On top of that, we've talked to many producers that will tell you their fields were planted in marginal conditions rather than ideal conditions just due to the time crunch at hand. And so keeping those things in mind, it seems like it's going to be a pretty difficult task to reach trendline yield this year. Now, that being said, we are continuing to see windows kind of open up here on the back end of things. I've heard of some reports of poor stand on the corn crop due to some crusting issues here and there. It does feel like we're going to get the opportunity to replant those spots if producers do decide to do so.
Okay, interesting. Thank you very much, Verl. Yeah, there have been a lot of those 2019 references because, 2019 was pretty drastic, right? I think we had severe flooding throughout parts of the Midwest. That was a heavily delayed planting season. But, you get to a point where you are at or beyond Memorial Day. And for folks that were still concerned with some wetness, it's only natural to at least think back to some of those more difficult planting windows. If you look at the drought map, which I think the most recent one was released this morning on Thursday, we have at least relieved drought conditions in almost the entirety of the Midwest. So, a little bit of concern with maybe the delays going into the ground in terms of planting in less than perfect conditions, but at least maybe as we push into the summer, it just gives us a little bit more backup, right? As we worry about potential dryness stretches and drought stretches we experienced last summer as well. And your points on trendline yield, virtually at this stage, I think most folks would argue impossible to hit trend line or the current USDA projections. So that's great to point that out. And I think part of the debate as we push into the summer will just be that acreage versus how much lower will yields actually be? And then, of course, does it matter, or how much does it matter based on the record crop we just harvested this past fall? So it's going to be really interesting. And I think that's going to be the give and take is as we're debating total production here through the summer in the U.S., how much do we still have on hand from old crop? How much can exports actually increase from here at any point? Have we maxed out capacity on ethanol? Those types of demand-driven conversations. It's going to keep things really interesting. So thank you for that, Verl. Jake, let's turn her over to you then for the feed buyers. How does all of this ultimately affect the feed markets here in the U.S.?
Well, I think by and large, as you said, sure, hitting trend line is going to be a pretty difficult thing to do, but we are far, far from having any kind of real catastrophe here with the current crop. We're on pace with the 5 year. We've got as good a soil moisture conditions as we've had in the last few years. Our ending stocks, both in corn and soybeans, are very healthy. And so I think as the Midwest farmer kind of wraps up planting over the next week or two, they're going to get back to hauling grain to the commercial pipeline, and we will see another little tranche lower on the basis front, at least on the corn side, because the demand there has been just very steady and average. There's a lot left in the bins. We saw a lot of this stuff get sold with these rallies in futures. Now it's time to bring it into the marketplace and start to get rid of it. I think maybe we don't see quite as big of a move lower in protein products yet, just because they still are cycling through some of those scheduled shutdowns for repairs and maintenance at these crush plants. But again, the beans are there. We're going to add crush capacity over the course of the next 6 and 12 months. I think slight delay in planting or any replanting this late in the season tends to lend itself to adding a couple of bean acres here and there over corn. So all in all, still a favorable outlook for the feed buyer. I think it's just a matter of time. We're seeing it in the futures right now. We've seen a little bit of softness in the corn basis over the last couple of months. Canola's really been the outlier, and that's largely been due to first the aggressive purchasing by China out of Western Canada, and then also this concern around potential rail strike in Canada, being able to move that stuff to some of these domestic markets. So far on that rail front, the Canadian government has stepped in much as the US government did last February and said, hey, y'all have to continue to negotiate in good faith and operate these lines. It's a piece of critical infrastructure. So no strike yet, but we're definitely seeing some inefficiencies as a result of those rail lines slowing down just in case there is some sort of strike. They don't have hazardous materials just spread all across the country uncontrolled. Still monitoring that, but again, I think it's a matter of time before it's resolved and we get these logistics figured out, and then you start to see the protein market trend in the direction we're planning to see the corn market go here sooner rather than later. We've seen a couple of first looks at new rail rates for this coming crop year, things that'll go into effect in September and October. And base rail rates, meaning just the initial cost to ship something from, say, Nebraska to Texas or California, wherever, those are going to be up $2.50, $3 a ton. Most years, the railroads increase it by call it $1.50, maybe $2. So they're up significantly more this year than they would be on average. We've been talking about trying to get some basis values back into the old normal range of what we saw trade from, say, 2015 to 2019, with the assumption that the cost of doing business along those supply chains is higher. And so we'd probably be in the higher end of those ranges or struggling to get all the way back into them. I think those rail rate updates confirm that. They give us a clear idea of what the true new number looks like. So we'll still be aggressive, try to get some very nice moves lower before we do any buying, but we have to be realistic that we're not going to go all the way back to where we were. So,
okay, Jake, sounds good, buddy. We've talked about this in the last couple of shows. We've certainly been talking to our friends in the industry about, needing to close this gap in terms of protein and allowing the South Americans, especially Argentina, a chance to finish up the soybean harvest of theirs, which is getting close. We talked about it on Parlor to Plate. We recorded that yesterday, hosted by Katie Burgess. The Argentines are nearly, let's say, 80 to 90% done with their soybean harvest. We get those beans over to their river system to be crushed, exported. That availability should be present for global protein needs in the next month or so. You've touched on, Jake, the Canadian situation in terms of canola availability and or potential logistic issues up there. If that can be relieved, and we also have another renewed supply, or at least limiting logistical concerns up there. And you've also touched on the fact that we are increasing our capacity to crush soybeans here in the US. That's just a fact. Those guys still have to buy beans and continue to crush them, which they have slowed down doing so, pretty much starting maybe let's say, end of March, early April, and have not quite picked back up that same pace just yet. But we assume, if you build it, they will come, right? We're going to expand this capacity. We're going to be crushing beans. We're going to have that excess meal available, or at least the stars. Again, we talk about the stars aligning for that picture. So it'll be interesting. And Jake, you also touched on potentially increasing that bean acreage number from what we had at the end of March. So might as well just throw out a bold prediction. I think that soybean acre number, Verl, at the end of March was 86.5 million acres of beans projected. So Jake, more or less, when we get that end of June acreage update, will it be higher or lower than 86.5 million acres of soybeans? Bold prediction.
I think it's going to be very slightly higher. They might keep it neutral. I continue to look at this wheat market and wonder, we've been talking about the wheat market leading corn higher, but I wonder how much it had to compete to get a few extra spring wheat acres in there. And maybe we lost some of the edge that beans may have had. So slightly higher, maybe neutral.
Very, very bold. Care to put a number on it, Jake?
I think 86.7.
That is very bold. Verl, how about you, bud? What are we going to do with that bean number at the end of June? About a month from now, really. What are we going to do with that bean number?
I think beans could come in a little bit lower myself. I think that guys, at least around here, that already have their chemical program on the ground for corn will be stopped from switching to soybeans at this point. And I do think ultimately, we saw a couple of weeks there of 485 to 495 corn, and that's a profitable level for a lot of producers, right? And anytime you can sneak up against that $5 level, you might have a few more corn acres than you were bargaining for.
Yeah, and Verl, I think you and your team, you guys were pretty busy when we took that December number up towards 495. That was kind of a sweet spot. There were a lot of us that were fairly skeptical that we would even be able to hit $5. It got close. Started sweating it a little bit on my side, but we ultimately avoided it so far. It's early yet. I know we've been on a 3-day decline here in corn, but hey, we've at least pulled it a good 20 cents from those highs. But as you noted, for a lot of folks, that's potentially, 50 cents a bushel in profit margin, depending on their cost of production and where they're living and growing. So, obviously that's going to range a bit depending on where they are in the Midwest. But for a lot of folks, that 495 number was a profitable number for growing some corn. So yeah, maybe that led to a switch from beans to corn. But hey, that's why we have the show. We have different viewpoints, right? So Jake, you're a slight above 86.7. Verl, you going to put a number on beans?
I'll throw, let's do 85.5.
A full million acres lower. That's a bold prediction. I got one before we go here, Jake. Really throw you a bold prediction here, but more of a bold statement. Jake, did we land on the moon?
Nobody knows for sure.
That's not bold. Yes or no?
Probably yes.
Okay. Verl,
I told that you don't think we did, which is wild.
That's false. I said we did. I think we did land. I just said stay away from TikTok, but I do think we landed on the moon. Verl, did we land on the moon?
Yes.
Yeah, okay, all right. I think we agree. Jake, you were hesitant.
Somebody's got to be a skeptic.
Someone's got
Healthy in science.
That's right.
I've never been there myself, so I haven't seen the flag, but I do believe it's there.
That's right. Well, yeah, one day, hopefully, we'll know for sure. Excellent work today, gentlemen. We really appreciate your insights on all things earthbound, but also any lunar conversations as well. We value your take there. A huge thanks to Verl for returning to the show. Great to have your take here from Atlanta, Illinois. We'd also like to thank the Everag Insights crew for their support. Thank you to Paige and Lexi for their production magic. And thank you to the viewers for watching the Grain Feed. Contact information is on the screen. We greatly appreciate your feedback. That's all for today. We'll see you next time on the Grain Feed.
You are going to get me canceled off the internet someday. One day.